Okay, so the double column cashbook, as we have seen, this is the format of it. So it also has the date, the details, and then it has one amount column for cash, and then one for bank. So you repeat same at the credit side. One thing you have to ensure is that when you put the cash first on the debit side, it should correspond with that on the credit side. So you can't put cash here and then you put bank here and interchange them, okay? Because at the end of the period, you have to balance the cash and then the bank separately. Okay, so this is the format of the double column cash book. I want to believe no questions. So let's quickly look at the triple column cash book or the three column. Now for the triple column cash book, as the name suggests, it means that we are going to have three amount columns. Okay, but these three amount columns, what are they going to record? But first and foremost, it is prepared by a business that uses both cash and check, and also applies, let me do it this way, or also allows discount to debtors and receive discount from creditors. Okay, so the reason why we have a triple column is that some businesses, okay, uses both cash and check. So please take note. The business should use both cash and check, and also should be one that applies the concept of cash discount. Cash discount. Now, let me do this here for us to take some few notes. In accounting, we have what we call discount. Discount. And I want to believe you know discount because a type of discount appeared during the sales daybook and purchase daybook returns. So can you tell me what you know about a discount? What is a discount? Yeah, anybody who is ready can tell me. Okay, Frank.
Discount is allowance given in order to encourage customers to pay their accounts promptly.
Okay, that definition is to a particular type of discount, okay? And that's a cash discount. But in accounting, when you see discounting in normal terms, a discount is an allowance, like you rightly said, an allowance of prices of goods and services. Or you can simply say it's a reduction in the price. So an allowance is a reduction in the price of goods and services. So it's a reduction in the price of goods and services. So that is a discount. Okay. Now there are two main types of discounts. So two types of discounts. The first one is the trade discount. Trade discount. And what is this discount? This is given, this allowance is given for bulk purchases. For bulk purchases, when you buy in bulk. So I don't know if you have ever witnessed this kind of scheme. They say one of the product is 1 cedi, but if you buy 5, you pay 3 cedis. Okay, because ideally if one is 1 cedi, then 5 should be 5 cedis. But they tell you if you buy 5, you pay 3 cedis. So it's like you are getting a reduction of 2 cedis for buying plenty. Okay, so that's trade discount. Then the other one is cash discount, the one Prof. Frank defined for us. Okay, so this allowance is given for prompt payment or settlement. Okay, so this one too, there is a scheme like that. They say if you pay today, you pay 5 cedis, but if you are going to pay at the end of the month, you pay 20 cedis. So it means that if you pay promptly, you get a reduction. But if you don't pay promptly and you delay, you are going to pay the full cost, right? So that's cash discount. And then there are 2 types of cash discount. 2 types of cash discount. That is the discount allowed and discount received. These are the 2 types of cash discount. Now, let me quickly take you back to the sales journal, purchase journal. So you remember when you were doing the sales journal, purchase journal, you were deducting some discounts. That is the trade discount. Okay. And in accounting, when you less it in your sales journal, purchase journal, return invoice, and return address, that is it. It ends there. But for the cash discount, we have these 2 account, discount allowed and discount received, which are debited and credited respectively to record any discount allowed or discount received. Now, the discount allowed is given by a business to its debtors. So discount allowed is what the business gives to its debtors, or the allowance a business gives to its debtors. And then the discount received is the allowance a business gets from its creditors. Okay, so that one is given by creditors to the business. Okay. So these are the discounts that you are going to be meeting in financial accounting. So take note of them. Let me give you some 20 seconds to grab this into your notebooks. Okay, but you have textbooks so you can read and get more information about it. But these are brief summary of what they are. Okay. So in the cash book, this cash discount is what we are referring to. That's the discount allowed and discount received. These columns would appear in the 3-column cash book. Okay. Well, I think if you are not able to copy, don't worry. I will share the notes with you on the page after the lesson. Okay. So as we say, it's prepared by a business that uses both cash and check, and also allows discount to debtors and receive discount from creditors. Okay. Now let's look at the format quickly of the 3-column cash book. I want to believe you have an idea of how it's going to look like, but okay. So that one has date, details, then it has the discount allowed column before the cash column and the bank column. Let me open the spaces so that my discount allowed can fit. Okay. Good. So that is for the debit side. The date, details, discount allowed, cash, and bank. Then on the right hand, we have date, details, and discount received. And we have the cash and bank following. So this is your 3-column cash book. So if you are solving an illustration, you have to be careful and you have to satisfy yourself that this business is using both cash and check, and is also applying the cash discount concept. It's very, very important that you know this before you draw the cash book you want to prepare. Okay, so these are the 3 types of cash book that we have to look at. Any question at this point? Okay, if there are no questions, let's familiarize ourselves with the main principles governing the preparation of the cash book. Now, as we said from the onset, the cash book is prepared to record cash and bank transactions. If we say that, it simply means that the cash book is used to record basically 2 things. The first one is receipt of cash and check, and also the second one, which is payment of cash and check. So it's either the business is receiving or making payment. That's why we say receipt and what payment. Because when it comes to cash or check, it's either the business is receiving it or the business is making payment using cash or check. So these are the 2 main transactions that a business will put in the cash book. So that should suggest to you that if the transaction has no payment or receipt of cash and check, you don't record it in the cash book. Let me give an example. Sold goods on credit to Amma, 5,000. Okay, sold goods on credit to Amma. This is a transaction, but did the business receive money or pay any money? The answer is no. We sold goods to Amma. She didn't pay. So the business didn't receive anything. And as you know, this is a credit sale transaction. And it has to be in the sales journal. Okay. But some examiners are very tricky. They can put some of these transactions and ask you to prepare a cash book. So don't get confused. All you have to satisfy yourself with is the fact that the transaction should have either receipt or payment of cash or check. I hope that is clear. If you're able to determine that, then there's the principle, as in the double entry principle. You are going to debit all receipts and then you credit all payment. Please put this principle in your jotters or notebooks. So in the cash book, we debit all receipts and we credit all payment. That means that if you read a transaction and the business is receiving, you are going to debit. In other words, you record it at the left side. If the business is paying, then you record them at the credit side. That is why we say debit all receipts and credit all payment. So ideally, when you are given the question, you read a transaction and then you ask yourself, is the business paying or receiving? Okay. If it is paying, you would credit your cash book. If it is receiving, you would debit your cash book. But like I said, be sure that there is receipt or payment of cash and check. If not, don't put it in your cash book. And I gave you examples like this credit transaction. If you sell goods on credit, if you purchase goods on credit, if you do anything on credit, please don't put it in your cash book. I hope that is clear. Okay, so let's take some illustrations. But before that, if you have questions, please go ahead and ask me. Let me pause small. So going through the question, the cash book of Ronaldo. First, he started business with cash, received a loan, cash, bought goods on credit, okay, bought motor van cash, sold goods for cash. So my first question is, what type of cash book are you supposed to prepare? Is it a single, the double, or the triple? I would love Prof. Sandra to do this for me. So Prof. Sandra, if you look at the single column, that's perfect. That's perfect. Awesome. Because all the transactions are in cash, 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 right? So we have to prepare the single column cash. So let me open my solution so that we prepare it quickly. So if you check the transaction, all the transactions are check, 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 then again, you do the single column. But this time, the amount column is going to have the bank column. Okay. So if you see a question where there's combination of cash and check, then you are looking at your double column. And if there's also discount in the discount allowed, discount received, then you look at your 3-column cash. So now that you have determined that it is your single column, let's draw the format and then we can record it quickly. So you just write the title cash book. Your first column is date, details, and then here we are going to put cash, then date, details, and then cash. Okay. But please make sure you bring your currency sign under the amount column. So in this question is Ghana cedi. Very, very important. You also need to write the name of the business on top of your solution. So this is Ronaldo's business. So you put in your currency and make sure you write the name of the business. So Ronaldo. All this will give you marks during exam. So make sure you do them. This is very, very important. Okay, so now that we have the cash book set, what you do is you read the first transaction and see whether you have to debit or credit. And you do that using the principle of debit receipt, credit payment. So on the first, the owner started business with 19,000 cash. So the question we ask ourselves is the business receiving money or paying money? And who is going to answer that question for me? Is the business receiving or paying?
The business is paying.
The business is paying from Frank. Let me check with Prof. Sandy. Prof. Alessia, you can type in the chat your view about that transaction. Prof. Sandra. Can you take it again? I didn't hear.
The business is paying.
The business is paying.
The business is paying.
Okay. Okay, so let me ask, paying to who? The business is paying money to who?
Say capital.
It's paying to capital. Okay. So let me let me disagree with both of you and say that in this case, the business is receiving the money from the owner, right? Because anytime an individual starts a business and invests in the business is receiving something from the investor or the owner. So that is why you remember the transaction, the owner started business, the owner invested. We look at capital and then the asset the owner is investing. Okay. We credit the capital because this account is that of the owner to show that the owner is giving something to the business. So the business is receiving from the owner. Okay, so here the business is receiving cash from the owner, which is capital. So in your cash book, you have to debit this transaction because you are receiving cash from the owner. So don't ever mix it again. Anytime you see started business, invested, or that is capital, like you rightly got it, for Frank, it's capital. But in essence, the business is receiving the capital from the owner. So the business is receiving. Okay. So first, the date is 1st May 2018. Then the details will be capital. Then you put the amount of 19,000 cash. Please, I hope you are not confused with this transaction. So just get it that anytime a business is started, you see, the business receives something from the owner. Okay, it can be cash, it can be check, it can be motor vehicle, it can be any other asset. Okay. Anyway, I'm holding on if you have question on this before we move. If you want me to explain further why this is a business receiving rather than paying. So you see that I asked you the question, the business is paying to whom? The business is not paying the money to the owner. Rather, it is the owner who is paying the cash to the business to start and do the business. And don't get confused. Always isolate the owner from the business. They are not the same people. In business management, you learn about the characteristics of businesses, and we say they are separate from their owners. So a business is separate from the owner. So when the owner is giving anything to the business, you acknowledge it as such. Okay. Even in accounting, we have one of the concepts called business entity concept, which says that the owner is separate from the business. Okay. So if somebody starts a business and he started with 19,000 cash, it means that person is giving that money to the business to start. Okay. So let me give an example so that it will make sense. If Mr. Moore, I want to start an Indomie business, and then I start with 19,000 cash. What it means is that the Indomie business has 19,000 cash. Where did it get it? It got it from the owner. So I gave it to the business. In other words, the business received the cash from me, the owner. Okay. I hope it's clearer now. Let's go to the second transaction. Received a loan from Philip. Received a loan from Philip. So here is the business receiving or paying. I think this one is simple because we have the term received. So the business is receiving a loan. So we are going to debit 2nd May 2018. The narration will be loan, right? Because it's a loan that we are receiving. You can add the name of the person giving us the loan, but the main account is loan. Then we'll put the amount 1,700. Okay. On the 5th, what goes on credit from Dominic? Please, I want your comment on this transaction. Is the business paying or receiving? This time, gentlemen first. For Frank, is the business receiving or paying money here?
Say none, because goods were bought on credit.
Okay, that is perfect. So here, this is a credit transaction. So the business did not receive anything or pay anything, right? So we don't have to record this transaction at all in our cash book. So we move to the next one, which is on the 10th. Bought motor van 12,500 cash. The business is buying a motor van using cash. So did the business pay money or receive money? Let me pick on Prof. Sandra to do this for me.
Pay money.
Exactly, paying money. So we are going to credit the cash book. So on the credit side, we'll put our date 10th May 2018. The details will be motor van, and then we'll put the amount 12,500. Then the last one, sold goods for cash. The business sold goods. So did the business receive or did the business pay anything? And I think I'll do this myself. If you sell goods and you got cash, you are receiving cash, right? So you debit your cash 15th May 2008. That was 2018. We sold goods for cash. So the cash came as a result of sales, 10,000. And that is all. Okay. Now, when you finish, you have to balance this cash book. You have to balance it. And you remember balancing of account using the balance carried down and balance brought down. So you need the total on both sides. You do the comparison, put the difference as balance carried down, and then you finish the balancing off. Okay, so let's do this. I think here is 30,700 and here is 12,500. So this side is more than this side. So we are going to use this total 30,700. So the difference will be here. That will be our balance carried down. So balance carried down. And since balance carried down is a closing balance, you use the closing date. So that will be 31st May 2018. And then you know that when you are done, the carry down should be brought down at the opposite side under the total. And you need to underline your total twice. So let's do that. Okay. So the carry down will come here. The date will be the next period. So from May, we go to June. So that will be 1st June 2018. Balance brought down 18,200. Okay, and you are done with your single column cash book. So any questions for me? Okay, Prof. Alessia, I think you went off because of network, but don't worry. I'll share the recordings in the group so you can play it back and go over the lesson again.